What do you make of the market moves in the last 2 days?
I think everyone's overreading it, in my humble opinion. I think if you look at the price action in S&P 500, that level of 4063 was reached again a few sessions ago. That, I think, is a critical level. It was tested again, and I believe that the market is going to test that level once again, and very likely breaking to the downside. But on the comfort side, there are a number of technical support levels out there, starting from 4,000 and every 100 points down to about 3,700, okay? So basically, I think what needs to be, I guess, revived in this market, right, is some kind of, real likelihood of a controllable inflation in the US, okay? And what kind of factors would be leading to that? I think a few of them, okay? So the oil has to come off in order for that to happen. And that depends a lot on Russia and Ukraine. The other point to note is, of course, the supply chain issues from China's, I guess, lockdown. Right?
And those are all sort of things that the Fed cannot necessarily control. So taking us back to your point about the dollar, I mean, the rally took a breather just in the past session, but it's back up right now. So when are we expecting that peak? Because, as you say, that's going to affect EM flows.
Correct. So basically, we all know that the job, openings is actually, quite a lot in the US, right? I heard that from, every job loss, you actually have 2 jobs out there for people to look at. And the wage inflation is a key part of inflation. So it needs to be a case where the US economy begins to, I guess, have expectations of mild slowdown in order for that to stop. Now, where are we going to get that point? It seems that, it is not there yet. And if we do get a couple more rate hikes, probably we'll start to see signs of the Fed, quote unquote, backing off a little bit, okay? And if you look at the US 10 yield, I think early in the show, there was a JGB yield chart that you showed. So US 10 yield, I think the critical level is 3.25. We're not so far from there, about 20 bips away from there, yeah? And that's a key technical resistance level. If we manage to, I guess, go south from that level, I mean, the yield-wise, it turns south from 3.25, then perhaps it is a sign of the market beginning to show that inflation expectations may have peaked by then. Okay, but we're not there yet. I think the market is probably going to have more likelihood of downside rather than the upside.
Where do you prefer to be right now when it comes to Asia ex Japan? Because you're quite measured when it comes to being able to get over the COVID hurdle and the lockdown hurdle in China.
I think, at this moment in time, we really need to look at where Hang Seng opens today, okay? But I think a starting point was the 19,900 level. We need to look at that level if it's going to hold today, because in the night futures is already nearly there. 19,900 was basically the level where this mini rally started, okay, before we had the holidays earlier this week. Now, that level, I think, needs to be held, because breaking that level, you could see a test of 19,000 again for the index. Okay? But having said that, we believe that there have been good volume of buying at the critical support levels. So basically, I think investors should be looking at, I guess, gradually going in the Hong Kong China market, because the government, they need to support the economy. Okay, because of the lockdown, they need to double the effort in supporting the economy. And we believe that, you could see signs of, I guess, infrastructure support, easy monetary policy, and possibly, potentially lightening up on the regulation crackdown.
The climate theme has been a popular one. Has that changed given the volatility that we continue to see in broader inflation, but also, of course, specifically in energy and commodities prices?
I think energy is likely to stay strong. Energy stocks and oil. If you look at oil, I think the support is around 105. The uptrend is certainly there. We are looking at $120 per barrel for oil, and the upside for energy stocks. What does that mean for the climate theme or stocks like the EV stocks? I think basically they are high valuation stocks. So with the yield at these kind of levels, it is quite unfavorable for those stocks. But having said that, if you look at the long-term prospects, I think long-term prospects is still there. So we've always, look at those as a longer-term theme, 3 to 5 year theme. There will be volatility ahead in those, but those are, the longer-term investment, and one has to be able to stomach the volatility there because they are high valuation stocks.